You asked for a top-down overview of the VPE right here on the last stream. So I'm gonna give you a literal top-down overview of VPE. Now, I'm gonna keep this kind of short. There's a ton of videos. Consider this like a free introductory kind of lesson to, what is explained in my course and what I talk about on webinars and things like that. At the core of the VPE model is understanding the volume profile. So it stands for volume profile execution, or trading the volume profile edges. You can change the E to whatever you want. The volume profile, by the way, is always it's that indicator per session that kind of looks like, this. There's a bunch of peaks and valleys, okay? Like that on the chart. And then we have our candlesticks. And so we might have some candles here, okay? We'll have some consolidation candles here. And then separately, we'll have some more candles down here, okay? Inside of these major nodes, right? And so the volume profile, really what it gives us is intuition about where people are positioned, okay? So let's not go too deep. I want to give you a high level kind of introduction to VPE. So first and foremost, there are some questions that we want to understand, which is, where are people? This is key to understanding trading in general. Okay, where are people positioned? A lot of people are price action traders. I'm not. I like to take a more intuitive approach to the market. And I arrived at this point, by the way, after trying all the other systems, right? We can see, there are a lot of people who trade ICT, for example, and we talk to them, and quite frankly, I'm just not sold on it. And that's because of the amount of subjectivity that everybody has to take with it. Like some people just take, full value gaps and things like that. And that's just because they're trading the imbalances. They don't realize that they're really trading around volume, and they're kind of overcomplicating it in a sense, right? And the VPE is a really, really simple approach to this. So where are people positioned? So let's say that we have a stock like Apple. Okay, so let's use Apple, symbol AAPL. And let's go ahead and do our price chart. And there are some prices that we care about, okay? So let's say Apple at 100, Apple at 200, and Apple at $300. Now, if I told you that there was a ton of people, right? There's this many people positioned at $100. There's this many people positioned at $200. And there's this many people positioned at $300. Now, I haven't said long or short, I just said positioned. We can start to understand how, if Apple is ranging, okay, between these prices, how the chart might look like this. Okay, we had a push up, we had some consolidation. A lot of people participated at 100. It created more of an aggressive upwards leg, and then it consolidated around 300. Most of the people are positioned here. Most of the people are positioned down here. So if Apple starts to break out of this level here at $300, and I have to ask myself, where is it most likely to go? Well, we can see that it's most likely going to come down, right? It'll sweep this previous low, but we should expect a reaction around $100. It's really, really simple, and that is what's core to the volume profile. Here's another way to think about it more intuitively, okay? Keep that question in mind. Where are people positioned? This is the analogy that I like to give people. You're a car dealer, okay? You're selling Toyotas, okay? You look at the market, and a Toyota Camry is $30,000. I don't know how much it is, but let's just say that you're selling a Toyota or a truck or whatever it is. It doesn't matter. You're selling cars, and you know that most people are buying at $30,000, right? So a ton of people buy at $30,000. You know that at $35,000, this many people buy. Okay, and you know that at $40,000, okay, an even smaller amount of people buy, and you know that at $25,000, this many people will buy. And then at $20,000, there's actually a smaller amount, because most of the people are buying at market, right? And then there's some volume lower. And this is for new, okay? This is new car sales, okay? Now, I've given you 1,000 Toyotas that you've got to sell, okay? You need to sell these this week. You need to sell 1,000 Toyotas this week. Now, you're looking at the prices that exist, and you need to ask yourself, while also making money, what price should I list my Toyotas for? Now, I haven't told you what your basis is on these Toyotas yet. That's important. Let's just focus on sell side. You want to offload these Toyotas. Now, obviously, you could list them for $40,000. You got to ask yourself, am I going to be able to sell all my Toyotas at $40,000? Probably not. So we'll get that price out of here. If I really, really want to meet the market, I should sell them at $25,000. Most of the people are willing to participate at $25,000. And we can surmise that just by knowing that most of the people have participated at this price. This is the volume profile. It tells us where people's bases are. It tells us where they're willing to participate based off of where they have to participate, but also tells us where they have to participate, okay? Where they have to participate. This is really, really, really important. So if we change this from cars, okay, and I know, for example, that at 25,000, let's just say that this is a futures chart. This is a futures chart and this is a volume profile. And I know that at this price, these people are long, okay? Most people are long here. Some people are long here. Some people are long here. Some people are long here. And some people are long here up at 40,000. Let's fix this here, okay? We have a small amount of people. So all of these are longs. We're ignoring, we're just gonna do one side of the market. They'll become more intuitive in a second. All these people are long and we have some price action, okay? We get some candles and the market starts to come back down, okay? We have a bar here at 25,000. Ask yourself, are these people gonna be freaking out? Obviously, because the market, they were green and now it's coming back to their basis. So what are you gonna get at 25,000? You're going to get sell side pressure, okay? Why? Because all of these people are about to go red, okay? It's really, really important. We just got back to this price here, okay? All of these people who are long now might be afraid, looking to get out. There's another thing that could happen on the other side, okay? We're just talking about buyers, but let's say that all of these people are long and the price is down here, okay? The price comes back up to them, okay? The price comes back up to 25,000 and these people are long. That's another reason why they might want to get out, okay? So people who were green or people who are significantly red, when we get to their basis, are going to interact on the other side of the market. It just makes sense. As we approach a person's basis, they will get emotional. It just makes sense. Just like you get emotional and you FOMO and revenge trade, everybody does the same thing, and that's the core to the volume profile. And so when we're looking at the market intraday, okay, on both sides, and this is why the edges are important. The edges allow us to not have to worry about longs and shorts. It becomes very, very obvious, okay? Say we have a day like this, okay? We have a day like this. This is the low of the day. This is the high of the day. Okay. Now, I don't necessarily know or care about the positions here in the middle of the day, right? All of this. I know for a fact, though, that at this price here, somebody went long. Okay. Somebody went long here and somebody went short down here. Let's say that the day ended here. Okay. This is close. Okay. This is low of day and this is the high of day. Okay. I know that here at the low of day, somebody went short, and I know that here at the high of day, somebody went long. So if the market, let's imagine settlement, market opens, and we get back to the high of day, ask yourself, pause. These people who are longing here, they've been red this entire time. The market gets back to their basis. What are they gonna do? We just reviewed this. They're gonna be sell aggressors on the way, right? They're gonna be selling on the way until we get to that last man. This is why sweeping these edges, why I call it sweep. We look for sell side pressure after we sweep a candle. What does that look like? Okay, we get a high volume, either doji candle, okay, or we get a high volume shooting star candle at the edge. That's a clear sign of what we are fundamentally saying here is that there's sell side pressure. We get a down candle. These are down candles, by the way. Okay, a doji, you want to be a red doji or a down candle at the edge. That's the A setup. Same as we get down here, okay? We want to get confirmation of the fundamentals of what we are basically saying fundamentally is happening at the auction. We want to get confirmation of this, right? So we get a high volume, okay, hammer candle or a high volume up doji candle. Now, if we don't get that, that means that this edge isn't that significant. And we can get an intuition about that by incorporating the volume profile. So how can we tell how important an edge is in the market or isn't in the market? Is by understanding where people are positioned relative to these edges. So that's where all the different volume profile shapes come into play, okay? Now, this video will be forever long. If I break all that down, I'm gonna start doing some free webinars and stuff on all of this. But it really is fundamentally simple. The complexity in this is just making sure that you always keep your bearings across multiple time frames. That's really it. It's honestly super simple though, okay? Right, it's super duper simple. So there's a few different distributions, okay? So one is we get a normal distribution. So if price escapes, we get to the edge of the day, we get to the high of the day, okay? And we know that most of the people are here. We get a signal candle at the high of the day, okay? We should expect the market to come back to where people are. Okay, so this edge, this is more useful if we know that most of the market is away from it. Where would that not make sense? Well, okay, if instead of having a D shape, we have a distribution where the volume profile really looks like this. This is what we call skinny belly. It's a P-shaped volume profile. Market moves up higher. You need to be cautious of this because there's a very obvious bias up here at these prices, okay, whatever these prices are. And so the market very likely, this is a bullish close, right? The market's very likely going to move back up. And so you don't want to necessarily short into that too much, right? So by knowing where people are positioned and paying attention to price action in context of their positioning, we can make really, really good trades and smart trades that honestly give super duper high, win rates, okay? And this is really important because people ask me, Forrest, is there like a certain setup or signal? It's like, no, it's always in context of the volume profile, right? So these signal candles, whether it is a shooting star, a doji, or a hammer candle, all high volume, are always need to be in the context of the volume profile in the direction of the trade that we want to take, and that gives us an A setup. These trades print money, and this is the system that made me a 7-figure trader. If you want to know more about the volume profile, trading with the system in general, hit up my Discord community. It's called Trade Edge. We have, my peer trader, Sol. He's another educator and trader as well. He's an amazing certified trader. He is in there. We have a ton of free content as well. I cannot iterate that enough. Everything that I know is out there for free. If you want it in an organized and structured manner, I do have a course where it will give you kind of the A to B approach about all of this so that you can start making money in the markets sooner than later. Of course, join the MyFundedFutures community. We hang out in there. If you want to get another prop account, go ahead and click the link down below. Check that out. But yeah, I'm super passionate about this stuff. VPE, in my opinion, is the smartest way to trade. It's the only way that I trade, and it just makes fundamental sense. Subscribe. See you in the next video. Peace.